Hey everybody, welcome to this week's podcast. David and I are recording August 17th, and there's a variety of things that we want to touch on today, but I think the one that we want to start about is this a routine healthy pullback that we're seeing really across the major indices. We can start with S&P, Russell 2000, Dow, pretty much anywhere you look, we're finally getting the reversal on a lot of the default charts. So for us, for point and figure, that's a simple reversal down into O's. And David, I know both of us on our morning updates have been talking about this and waiting for it for a while. Maybe we're a little bit early on expecting the pullback, but finally getting some of the downside that we've been looking for.
Well, in many ways, it feels like we were waiting for it for so long that when it finally did happen, folks were going, "Oh, wait a minute, this is what we were waiting for." But then we were so used to seeing so much upside action, especially over June and July, that ultimately, when it finally did come, it kind of gave us a little jolt. But in many cases, as we've talked about, a lot of these pullbacks have been pretty normal and actually fairly
Yeah.
healthy in many ways. I mean, even
And not
sort
to
of the
mention
whole.
like August,
Go ahead.
September, this is, I was gonna say, and not to mention like August, September, this is almost to be expected, almost too telegraphed, to be honest.
Well, for as historically terrible as the 2 months have been, I mean, not only for the markets, but for a variety of things in many ways. But as it comes into, it's kind of the summer slowdown. We talked about, as the summer rolls along, there is sort of the summertime blues. We got a bit of a positive summer. Maybe getting a delayed summertime blues, if you will, at this point, if you even want to call it that, because generally speaking, again, this is all pretty healthy after we've seen such a pretty strong run up. The last domino to fall in terms of US equity index is looking at the Dow Jones Industrial Average just finally reversed down this week to 35,000, has moved down to 34,800 with yesterday's action, even kind of staying around that 34,100 level or 34,000 level today. And similarly, we've seen some of the other US equity indexes pull back. We've seen the S&P pull back to the middle of its trading band with yesterday's action kind of moved through just below the middle of that trading band. But, again, not too detrimental to the technical picture right now,
Yeah.
because it is pretty easy to forget that a month ago conversations were how overbought everything was, and we were waiting for the pullback and looking for opportunity to go ahead and maybe add some positions. And now I think we're getting that.
Yeah, and even like with the S&P you mentioned on the default chart going below the middle of the trading band, I like to look at that 50-point longer term view. I probably bring that up too much on the morning updates that I do, but even on the 50-point chart, we have a mere three-box reversal, have yet to reach the middle of that trading band. That'd be at 4,400. So I still think up to that level, this would be very healthy, very routine. Talk about another index, the Nasdaq 100. Ian put a piece in the report earlier this week looking at 5% pullbacks for the Nasdaq 100. The median number of pullbacks a year is five, average is six. We're at two for the Nasdaq 100. So to put it into perspective, it's been a pretty quiet year in terms of pullbacks, in terms of downside. So I wouldn't freak out just yet. I know people are quick to think this is going to be a 15-20% downturn any in anytime the market sneezes, but I wouldn't be too concerned. If I were to put one index that I don't love the picture of, that'd be the Russell 2000 small caps.
That
And
was
you
the
would
one I
probably
was
agree.
just
Yeah.
looking at. And really the fact that we saw that strong rally, but in many cases we saw other US equity indexes capable of rallying prior above prior resistance with some of this action during the summer. But you didn't get that with the Russell 2000. It ultimately ended up matching its rally high from earlier this year. Now it's fallen to give a sell signal, and probably a little more key to me. We saw that pull back to the middle of the trading band, and there's pretty significant old resistance there at that 1900 level on the middle of the trading band, and we moved through that pretty quickly yesterday. So that's not the greatest sign in terms
Yeah.
of a technical breakdown. I mean, again, does it fully put the technical picture of RUT into a detrimental state? No, it's still a couple of boxes above the bullish support line right now, as well as above some support in the 1820, 1830 level. But definitely doesn't leave you with any warm fuzzies watching that 1900 level taken out there.
Yeah. No, I would agree. And like you said, the resistance to 2000 seems pretty firm. So Russell 2000, you really like to see that maybe stop the bleeding here, start to pick up, put in a higher bottom, and move on. I guess not higher bottom, but anyways, move higher from here. So with some of the index downside, we've naturally had a decline in participation as well.
Hmm.
Some of the indicators that you and I have talked about, like bullish percent, a variety of those have reversed down over the past week, still in high field position, so above that 50, 60% mark in most cases, some cases.
Hmm.
I think the most notable one that we wanted to mention today and the latest would be that positive trend for the S&P 500. So PTSPX is the indicator on our system, the jargon, if you will. That's looking at the percentage of S&P 500 stocks in a positive point and figure trend. That reversed down yet yesterday to about 68%. Most of our studies will say as long as this thing's above 50, you're okay for the market. In fact, if you get
Hmm.
really specific, if you're in O's between 60 and 80, it's actually a little bit better, given that the market's had its run up and it gives you a pullback, I think is a conversation. But it did reverse right back down off the February 23 high at 74%.
Yep. And matching that, was a positive, a bit of a silver lining in a way, but we had also really hoped to see that kind of inch up towards that 80% level. 80% necessarily isn't a level that's, some golden threshold or anything like that. It's just once you reach that level, it's not hit that often. And, you do see some level of pullback after that. And so really even hitting these high levels above 70 is not too surprising to see a reversal as stocks retest trends, maybe even flip back into negative trends as, they may have been testing support with some recent downside action. But as you said, looking at it, one of the easiest ways to say it, and I like to frame it this way, right now, two out of three stocks within the S&P 500 right now are still trading in a positive
Yeah,
trend.
well put. Yeah,
Boiling it down to that frame of mind, you're thinking, well, as long as my stock's still in a positive trend and I'm still maintaining a buy signal, you're sort of on the right side of the indicator. This is something that when I was learning indicators, and how to use them, it was understanding what the information was, but then understanding where my positions or what advice I was trying to give. So understanding what value it was and where you were based on, that indicator's level, position, so on and so forth. And if you were still participating in the upside part of the indicator. So as long as you're still seeing positive trend in your stocks around a buy signal, even if you've seen a pretty good run up and a recent kind of initial sell signal, that's not really anything to be quote unquote running for the hills for. It's still a positive sign to see many of those things happening because, again, it's easy to forget that June and July, we saw a pretty good run up, and it was sort of waiting with bated breath, trying to find an opportunity to go ahead and execute some new positions because folks were like they were missing out on the rally. Now we're getting it, and it's sort of like, well, wait, is this going to continue? And really, looking at it, no one obviously knows if it continues, but right now, the elevated levels, we didn't retest prior low levels. This is sort of what indicators tend to do. If they can hang out to that, like you said, that extent where they're saying the majority of positions are still participating to the upside in some fashion, or at least elevated levels, that's still a positive sign. And again, if we're on the right side of the coin, if you will, or of that conversation, then folks are still okay. So nothing
yeah,
too much to worry about in that aspect.
yeah. Something for the conversation here. I've been listening to a lot of investor psychologists and behavioral psychologists about markets, about finance. Recently, I've been studying some of that as well. Something that I've been looking about, something that I've been learning about is availability bias. So that's where people, it's a mental shortcut that it relies on immediate examples that come to a person's mind when thinking about a specific topic, concept, whatever it may be. So for markets, there's been, I think, an increase in availability bias over the past 3 years. Markets have been abnormally
Absolutely.
volatile. Anytime it goes down, it typically goes down quickly, and then when it goes up quickly. So I think a lot of people have these recent examples in their mind and they're overweighting those examples and how it seems to be. And they don't look at the total history of the market, the total
Mm-hmm.
behavior of how things have been in the past. That's some recency bias, of course, availability bias. There's a lot going into that, but I think that's something that's some questions
Absolutely.
that I've been fielding a lot lately.
Well, and it's trying to just develop confidence. I mean, that's the gist of it is we're trying to develop some level of confidence to say go ahead and pull the trigger because 2022 wasn't anything anyone wants to particularly recall for any good
Right.
reason.
But they
So
will
you're
recall
right.
it
Yeah,
because it was
they will
painful.
recall it. Yeah, it
Yeah.
was painful, but
Talk
we
about in
continue to go ahead.
I was just, and talk about like investing, like your best investments probably shouldn't feel that comfortable. Like the best times to buy in the market are never when you got the warm and fuzzies and every
Hmm.
indicator's like go and get it. It's typically when the market's down. Maybe again, this is r very minor, all things considered, but it's typically when the market's down big, when it's uncomfortable, when there's bad headlines. That's typically the best time to buy. Anyways, I was going on a rant, but I'm tired of people getting freaked out about a 5% pullback,
Yeah, and we're delving into more behavioral finance rather than just technical analysis on our part. But
which is not us. Yeah.
yeah, that's not our realm. We'll stick to the point and figure piece. We like to provide conjecture and our own opinions, but
Right.
we'll stick to the point and figure piece as long as we can. That's the one we know the best. But one of the things that we continue to watch, globally speaking, we've talked a lot about the U.S. and some of the things that we've watched within U.S. indicators as well as U.S. indexes. Here recently, we've been keeping an eye on the U.S. dollar as it's gotten pretty darn close to a potential buy signal here. If you're looking on the system, that symbol is DX/Y. And at the moment, looking at it, you generally see a negative trend. And we wouldn't say that trend is ending right now by any means, but there's at least kind of some initial signs that we might be getting a buy signal if we see that move on the chart there above 103.50 would lead to the first buy signal we've seen since the latter part of 2022. Again, wouldn't necessarily change the overall trend. That would still remain negative, but might be the first sort of initial rippling effects that we see with maybe a potential change in trend with the dollar. So that's something that we've been keeping a close eye on this week.
Yeah, I think that'd be big. I think that'd be probably the most notable thing that would happen for a while because if you look at that dollar chart historically, it trends really well where you get a buy signal, consecutive buy signals have followed, sell signal, consecutive sell signals have followed. So that change in signal would be material to us. One for the trend of the US dollar, but also for some of the broader implications that you see from rising, falling dollar environments. Before we got on the call, you brought up, was it EEM has
Mm-hmm.
tested its bullish support line, and some of the emerging, excuse me, not emerging, but international markets broadly have cooled down over the past few weeks as the US dollars ran, which makes sense.
Well, we've seen, like you said, EEM coming down to test that bullish support line, a move below 38.50. We saw it hit a low of around 38.83 yesterday, or actually the previous close was 38.57. So was close to moving below that 38.50 level with yesterday's action. So we keep an eye on that. It'd be the first time we've seen the trend move back negative since the beginning of the year. And really, much of that's been boosted by a lot of action going on with China, which we won't delve too much into because that could be its own separate podcast. But that has been one of the big primary drivers. It was actually interesting yesterday. One of the pieces I was looking at was, folks were talking broadly about emerging markets breaking down, but then looking elsewhere within the emerging market space, there's some pretty darn good looking positions potentially within Latin America. So, it may just be avoid China right now, look for individual country opportunity. It may not look so much broad based right now as we're seeing EM test that bullish support line. And we've actually seen the FAA reverse down on its chart as well, maintaining a trend slightly better than EM, but it's not like it's just been emerging markets that have participated in this recent pullback by any means.
Yeah. So if we were to leave you with something, I would put this on your watch list for the US dollar changing. Some of the broader performance implications, we typically run a piece that's where when the US dollar runs 10% higher or pulls back 10%, we'll classify that as a rising or falling dollar environment, respectively. So we have not seen a 10% rally by any means here, but should that take place, some things that typically coincide with that rising dollar would be weaker international markets, weaker commodities, but both of those asset classes have softened most recently as well. Domestic markets, S&P 500, Nasdaq, not a ton of performance difference between the two. I mean, maybe you could chalk that up to globalization and foreign consumers how expensive are the U.S. goods comparatively. But overall, I think the biggest pictures are going to be international and commodities. So keep an eye on those. U.S. dollar breaks out. That could be a sign to maybe lighten up on those two asset classes. David, anything else that you wanted to bring up for the group? I think I'm at the end of my Google tabs here.
Yeah, I believe I've reached the end of my Google tabs this week. That is generally speaking, like we said, it's been healthy action, healthy pullback. While it might seem uncomfortable in the midst of it, it would almost be interesting to say just wait a week and we'll revisit you next week and see how it goes.
Yeah, no, that's a good summary. Well, cool. I'll go ahead and call it good then. So we appreciate it, everybody. I'll give a plug if you aren't coming to see us in Vegas, you should. Dave and I will be there. The rest of our team is going to be there running a lot of the educational sessions. We'll be there to work on variety of things, whatever you want to talk about. So definitely hope to see you in Vegas. Also tune into our morning updates. We have a good time with those. And Miles. Well, cool. All right, everyone. Appreciate it. We'll see you.